watching Closing Trades on ET Now. I am Snehisha and this is a show where we are going to be discussing the last hour of today's trade. Let's take a look at how the markets have panned out so far. It's been a flattish day for the Nifty, but we've seen a little bit of a recovery a few minutes ago and we've tapered down from there as well. Nonetheless, a 0.2% uptick is what we're seeing on the Nifty right now. Same moves coming in for Sensex, 0.2% higher. It's Nifty Bank that has picked up significant steam since the day's low, a 0.3% uptick coming in from the Nifty Bank. But today, indeed, it is the day of the broader end of the market. You have the mid-cap space that's up by almost 0.5%, and the small-cap space is also doing pretty okay for itself. In fact, it's once again outperforming the entire breadth of the market, a 1% uptick coming in on the Nifty small-cap space. Select stocks from the Nifty50 pack continue to do well. Jio Financial, you have approval news coming in over there with its JV with BlackRock and their investment services. So, Jio Financial, positive move. Adani Enterprises, IndusInd Bank, Asian Paints, Apollo Hospital, Power Grid, they continue to do well. Dr. Reddy's continues its day in the red for the second straight day. You have Trent, Eternal, Wipro, Bajaj Finance and Tata Consumer that are joining that stock in the red. Some other stocks to watch out for in today's trade while we are talking about stocks that are in news. You have Akzo Nobel, of course. That stock has been in news ever since we've heard the announcement about the JSW Paints deal, wherein JSW Paints is all set to acquire up to 74.7% stake in Akzo, and the size of this deal is going to be around 9,000 crore rupees. So that is a stock to watch out for. Jio Financial, like we spoke about, the SEBI nod to Jio BlackRock Broking, and Coforge is another stock in focus on the back of a brokerage note coming in from Kotak Institutional Equities, wherein the brokerage has maintained a buy rating and hiked the target price to 2,100 from 1,800 earlier. So that stock is higher by 1.1%. But Nikunj, what are you making of the kind of trading session we've seen today? The GIFT Nifty was implying a much higher open for us. We were flat and we've seen a little bit of a recovery, if at all.
See, what is important for me that we've spent considerable amount of time above what could be called as a key resistance point. So now it's the fact that you glided past through 25,200 is a reality. So technically those new numbers, they kick in. Second, you're going at a time when the global support for equities is strong and the global support for dollar index is missing. So, of all the vectors which we look at in the near term, technicals, flows, currency situation, I think all of that is favorable. Now, typically what happens is that when you see this kind of a move, you would imagine that there should be a bout of short covering, which has not happened. But if that is not happening, the broader market end, I think, is obliging with a very strong kind of an price action. So you cannot be bearish in this market. I think it's not too late also to get bullish. A lot of individual stocks now just rediscovering their rhythm. So for a market which was struggling for rhythm, for a market which was not giving anyone a reason to go home with a smile on their face, well, guess what? Now this market is giving you plenty of stocks, ideas, and stocks which are on the verge of what really could be called as renewed vigor, so to speak. Do you agree with that?
Yeah, I think that rediscovery path is the right word over here, Nikush, which you rightly mentioned. And I think we are seeing many of the sectors rediscovering their mojo. But there's also a clear shift of sector patterns which is there. That sector rotation, which we discussed, that becomes the hallmark of every trend. We are seeing that happening for the trend this time around as well. This is the second straight day where the real estate index, for example, is seeing some bit of profit booking. The PSU defense names, the PSU stocks at large, I think you don't see any major kind of a breakout over there. And the money is moving back again to those solid large cap names, whether it's banks, whether it's financials, whether it's individual large cap names. Today, in fact, you saw the capital goods pocket in the likes of L&T, Siemens, etc. They were the ones which in the first hour or so, they managed to see a very strong round of momentum. So I think it's now getting very, very specific towards few pockets. And the good part is that within those pockets also, the money is getting concentrated back towards the large cap names. I think that should solidify the move for the index going forward. I still believe that 25,500 is a very solid and a strong base now that we've crossed back over those levels. And I think keeping that as a stop loss, traders can continue to hold on to their long positions.
Okay, traders can continue to hold on to the long positions. But Kunal, somewhere I would say I'm happy and disappointed. Both happy because you finally got past that hump of 25,200. Disappointed that the kind of short covering which we anticipated after this 30-31 day of, kicking here, kicking there, somehow that massive urgency to cover short, which should have come under normal circumstances, is not there.
Yeah, it's not there, Nikujan. I think, for once I would believe that it's a good sign because, it's not that euphoria is kicking in. And if the euphoria starts to kick in early, at this kind of an early stage, then we would probably have anticipated maybe that the markets would top out very quickly. The fact that traders are still little bit skeptical, I would say, in terms of building positions more on the long side, or maybe cutting forward their short positions, trying to reduce those short positions, looking at more skew towards the long side, I would believe that that's a very strong signal that the markets still has more room on the upside.
Okay, so that's the way Kunal is expecting the markets to pan out from here. But let's get you some exclusive news on the divestment of PSU. Sources tell ET now that the government is currently focusing on IDBI Bank divestment and will not push for NMDC Steel's process in this financial year. Prakash is joining us with more exclusive details on this. Prakash?
Yeah, that's an important development coming in as the government sources are indicating that the NMDC Steel disinvestment is unlikely in the current financial year, as process is facing roadblocks due to multiple reasons. Sources are indicating that the government will not push aggressively for NMDC Steel disinvestment, and the process will be put on fast track once pending issues are resolved. As you are aware, that the company has already operationalized a 3 million ton steel plant at Nagarna in Chhattisgarh, and the process to improve its capacity going forward. Government sources are indicating that it has adopted a calibrated disinvestment strategy and will continue to focus on value generation and asset creation in PSUs. Therefore, IDBI Bank's disinvestment remains the only priority for the current financial year. In fact, the process is progressing as per plan. So it's a clear signal that the government is moving ahead with the calibrated disinvestment strategy, providing its focus on value generation and asset creation in PSUs, making efforts to create more values for shareholders, and expecting a record dividend from PSUs in FY26.
When will the PSU divestment happen? Nobody knows. Frankly, in the PSU divestment space, Sneh, the success has been very limited. I mean, once upon a time, Tatacom, which was known as VSNL, was divested. It went to Tata's. IBP was divested, but it went to IOC, which is a government company. Those are two large divestments which happened. Then, of course, Hindustan Zinc, the most famous one. But barring that, divestment is not you take a company public.
Air India?
You're right, actually. Air India is the one. But Air India was sold because nobody was ready to. Air India also had its own set of complications, which is debt. So Air India was more like a stop loss which got triggered for the company. So it wasn't compulsive. They had a stone, a stone around their neck, and somebody had to get it out. So Tata's really bailed him out. Barring that, nothing actually. No banks have been divested. Companies have gone public, but that does not mean it's a proper kind of a divestment which actually has happened. Because time and again IDBI is stuck here. Time and again NMDC, which is a government-owned subsidiary, is getting stuck here and there. None of the land, very little land has been stolen. The success has been that they've taken some railway subsidiaries public. The success has been you've taken many more power companies public. Modern businesses like IRDA have become public. Modern businesses like REC, PFC, they've become public. PSUs have created a lot of wealth. Why? Because they've disciplined now. There's a time when every 3 months NTPC would sell. Every 2 months, REC, PFC would sell. HBCL got merged with ONGC. Those were the divestments which were happening. Now it is, in genuine value creation is happening. Banks, nothing got divested. Yeah, banks were compulsive merger because they were going belly up, and the consolidation to excepting SBI, every other PSU, 3 large groups happened. And for SBI, all the 4 subsidiaries of SBI got merged into one. So barring that, in terms of M&A news, if you are an M&A reporter of PSU, it's bad news.
No,
It's like that, you never get news.
Not enough content on that front. But Kunal, what are you making of some stocks from the public sector basket? Not necessarily banks, but the broader end of it.
See, I think there are very few of them which are now looking attractive at current levels, because all of them had their fair share of a run-up in the last 2-3 months. Whether you look at, for example, defense pack, you look at the likes of BHEL, there was a zone where the railway stocks, they were at the peak of momentum, whether it was Titagarh, IRFC, etc. These stocks had done reasonably well for themselves. But then now I think it's getting a lot more scattered. You don't see we don't see a pattern emerging into the entire PSU theme. Maybe one of days you see a stock like, for example, BHL moving up higher, but then on the other day you expect that these stocks consolidate. Even with the defense pack, BEL, HL, etc. You look at the last 3 or 4 days or last 4-5 trading sessions, these stocks have been actually sideways and trading into a trading range for themselves. So I think that's the concern which is emerging right now for the PSUs.
Okay, so that's Kunal's take on the entire PSU basket. But the latest greenhouse gas index shows a worrying increase with CO2 and methane levels at record highs. This surge is driving global temperatures upward, fueling extreme weather and threatening food and water security. At the India Climate Summit, carbon efficiency and offsetting are in sharp focus as India and the world race towards net zero targets. On that note, we'll slip into a very short break and be right back with more to discuss, lots more to discuss with our guests on the show.
Venkatesh Bala Subramaniam, Managing Director and Co-Head Research with GM Financial Institution Security joins us now. We've got Arpit and we've got Kunal, so we're talking technicals and we're also talking the big picture view. Venkatesh, what's your sense? I mean, this market, is it running on, is it running higher because of liquidity, or somewhere there is a bit of an optimism which has kicked in regards to where the economy is moving?
See, we believe this is basically running on liquidity. Domestic flows have been very, very strong. As you know, the monthly SIP number is still very strong at almost 267 billion per month. So even though mutual funds have around roughly 5% of their holdings in cash, every month when you get these holdings, when you get these flows, you need to deploy it. So that is one thing. Secondly, since March onwards, what has happened is FII inflows have actually turned positive. So March, April, May and June so far, FII flows have been positive. So definitely this is running on flows. Fundamentals are not that weak. Fundamentals are okay. The economic outlook is also quite good. But as you know, valuations are nowhere attractive, whether it be large caps, mid caps, all small caps. All of them are trading at one standard deviation or more above the mean. So valuations, very tough to make a positive call based on valuations. Fundamentals are okay. Outlook is okay. But at this point in time, whatever run up you're seeing as of now is more because of flows.
That's the take. Let's also welcome Arpit Beriwal, Manager Derivatives at Motilal Oswal Financial Services, joining us on the show. Arpit, hi. What sense are you making of the market moves today, especially given some pockets that are really standing out in today's trade? There's this phenomenon we're seeing that what was doing well yesterday is not necessarily what's doing well today. You have energy, PSU banks that are doing well today. What are you making of this move today?
Very good afternoon to all. So if you've seen yesterday, finally Nifty was struggling from last almost 6 weeks to cross above 25 250 zones. And couple of days back, we have seen that breakout. And yesterday there's a one-way rally across Nifty and especially Bank Nifty where it touched new life highs. So looking at the setup for the July series, we're definitely bullish on the overall market outlook. Definitely selective sectors are likely to outperform. And eventually our target for Nifty would be around 26,000 on the cards. Bank Nifty is new life high territory and definitely there is some more momentum that can be seen towards 58,000. However, talking about the sector specific, definitely energy, mainly led by Reliance, that has given a classical range breakout. So I think energy stocks from year on can definitely outperform. Along with that, second sector would be within from the financial pack, that is the NBFCs. So all in all, I think good market with good small cap and mid cap advanced equity ratio favored in the favor of bulls. We're expecting good momentum across the sectors, especially energy and financial sector as a whole.
Okay, so that's what you're liking right now, and that's how you're seeing the market setup. Venkatesh, I was reading this recent report by you, and what really stands out to me is that you are overweight real estate, REITs, and travel and tourism. Given that this entire Mahakumbh trend is behind us, one would believe that this sector could see a little bit of softening. What is driving this conviction for you?
It's like this. We are benchmarked of the Nifty, right? And in the Nifty 50, you don't have any real estate stock. So if we like any real estate stock, automatically we go overweight on real estate. Now, if you see the broad real estate sector, it's not like the sector is cheap. Most of the stocks are trading almost 15 to 20% above their NAV. Historically, trading bands are maybe 15-20% below NAV. So we are very, very selective when we come to stocks. We like DLF because it is trading on par. We also like the REIT names primarily because as interest rates come down, a lot of these REITs become very, very attractive. they are all trading at roughly around 7% yield and 10% growth. So it is more of a interest rate kind of a play when it comes to REITs. Real estate, we like again from a interest rate perspective, but it is not like we are positive on all real estate stocks because some of them are expensive, and we are aware that over the last couple of quarters and the next couple of quarters are going to be a little bit on the softer side. So that is on real estate. Now coming to hotels, here this has got nothing to do with Mahakumbh. Over the last 4 to 5 years, there has been hardly any investments which have been done in when it comes to the hotel sector. So there is a lot of demand, but the supply is not adequate. We believe this is likely to continue over the next year and a half or so. So from that perspective, we like hotels as a structural play. So some of the stocks which we like here are the recently listed Leela hotels. We also like Chalet hotels here. So these are two names which we like. So yes, I mean, we are overweight on hotels, real estate and REITs. Incidentally, none of them form a part of the Nifty.
Okay. What's your view on pure vanilla consumption? Tax cut, good monsoon, low inflation. Are we in a comeback patch for them?
Unfortunately, the top-down story seems very, very compelling, right? So you hear that the monsoons are very good. You hear that the tax cuts have happened in the recent budget. So ideally, one should be very, very positive consumption in auto. But when we are doing the channel checks bottoms up, that is not coming through. So our approach to portfolio construction is more bottoms up and not top down. Just because the top down view is positive doesn't mean we'll go overweight a sector. For us, it has to perform bottoms up. And unfortunately, volume growth looks weak when it comes to consumption. So we are underweight consumption. On auto, again, the problem is we are going to see a weak year when it comes to two-wheelers, four-wheelers, and CVs. Our advanced channel checks are also suggesting the same. So while we are not underweight auto, we are more equal weight because valuations are at least reasonable in auto. Whereas in consumption, valuations are very expensive. So we are equal weight, we are neutral auto, whereas we are underweight consumption.
Soap and shampoos are not selling, but luxury rooms are selling. Airports are clogged up. Cinema halls are empty, but restaurants are picking up Venkatesh. I mean, what a phenomenon is this, right? One side you've got FMCG, which is struggling because of discretionary spend is under pressure. Apparel, which is just about doing okay. But luxury and hotel and hospitality is doing exceedingly. Why do we have such a dichotomy?
See, maybe we have to once again revisit some of this data, data point. When you generally analyze any industry, look at penetration rates. So we need to perhaps ask this question that when it comes to basic consumer staples, have penetration rates in some of these staple sectors reached a level where maybe structurally you cannot grow faster anymore? So some of these questions need to be asked. Over the last 2 to 3 years, one of the key drivers for a lot of consumer staple names has been premiumization. Now, to some extent, I guess maybe at this point in time, maybe people don't have enough money to spend at the lower end of the strata. That could be one of the reasons why you don't have a lot of consumption when it comes to the mass end of the market. But of course, at the premium and the super premium end, I think there is enough and more, there is a bigger growth runway here. Because as per capita income in a country keeps going up, some of these sectors generally tend to do very well.
Okay, so that's the take on consumption, but let's shift focus from that. And Kunal, some of these oil and gas names are doing exceedingly well in today's trading session. Case in point, you have HPCL, BPCL, IOC, IGL, GAIL, all of them are holding up pretty well in today's trade. What are your views on some of these stocks like HPCL, BPCL? How are they shaping up on the charts?
Yeah, this is a very big breakout for many of the oil marketing companies, specifically for HPCL, which I think yesterday also the stock was a outperformer with respect to the other two peers. Today also the stock has been a rank outperformer. It's up more than 4.5% as compared to IOC as well as BPCL, which have been slightly muted comparatively. But I believe that that's a signal that we are looking at a turn of events for the entire OMC pack. The best part is that the zone when the crude oil prices were extremely volatile from sub $60 to close to that $79 and $80, even in that phase we did not see any major kind of a sell-off or a turnaround on the downside for these OMC stocks. And the moment we saw a whiff that the crude oil prices start to abate back again from 79 to back to that sub 70 mark and hold on to those levels, that's where we see the confidence brewing back again into the entire OMC. So I believe that that's a very strong signal that maybe we are looking at a solid base being formed for the entire sector and potentially a breakout which could last for many weeks as well as many quarters.
Arpit, what is your sense? I mean, this has been the laggard PSU space, so to speak. It did not participate in the erstwhile PSU bull run. Can OMC stocks enjoy the spot in the sun now? Arpit?
Yeah. So if we see overall the PSU stocks as a whole, mainly talk about the PSU stocks. So if you talk about the banking space, relatively the entire PSU pack has underperformed. And going forward also, if we see overall the setup wise, on the chart wise, technically also it's got stuck in a range. But if we see selective pockets, such as within the PSU bank, if we talk about particularly Indian Bank, so where all the other banks are underperforming, whereas Indian Bank is at life high territory. And I think definitely as the financial pack will pick up, Indian Bank is likely to outperform a classical pole and flag breakout on the monthly chart. And I think this count is likely to outperform going forward. So I think within PSU Bank, very selective buying interest has been seen. However, Indian Bank is relatively very strong and we can definitely see good uptick towards 660, 680 levels going forward with key support around 590 levels.
Venkatesh, which end of the PSU space is looking interesting?
See, amongst the PSUs, the company which we like a lot is basically SBI, followed by Bob. But we have a preference for SBI over Bob. So at least when it comes to banks, I think the large caps are also relatively cheaper. So hence we would stick to large caps at this point in time, wherever large caps look reasonably valued.
Why do you think Venkatesh SBI is raising that kind of a capital? I mean, I'm just wondering, they don't need capital. And if they raise 25,000 crore of QIP, I mean, either they are hungry for growth or a large NPA is coming. I mean, why would a bank which a quarter ago said that we don't need capital for 2 years is planning to raise 25,000 crore?
We certainly don't believe that a large NPA is coming because I think the NPA cycle is largely behind us. This is possibly to recharge their balance sheet for the next 3 to 4 years of solid growth. Maybe they are targeting a much higher growth levels than what they have done over the last few years. So clearly this will be more growth focused than anything else.
Thank you so much for joining us on the show and sharing your outlook on sectors as well as the overall market. On that note, we'll let you go. But time to get in some BTST ideas from our techies. And Kunal, you go first. What's looking good?
So FSR Nykaa is something which I would suggest as a buy. The stock classically showing signs of a breakout of a swing resistance about 206 mark. Would look out for 218 as a target. Stop loss at 204. Torrent Pharma is the other stock which is opened with a gap up, and interestingly the gap up has been above a major cluster of resistance for Torrent Pharma. So would look out for 3500 as a target. Stop loss at 3200.
Okay, so those are some stocks that Kunal is bullish on at the moment. And Kunal, interesting you say Nykaa. We were just talking about this stock yesterday, this time, given that they had come out with their management day takeaways and we were taking a look at the presentation. Good chart, growth chart is the company. That is something they've chalked out for themselves. So that stock looks good and it's doing pretty well today as well. It was doing well yesterday, continues to do well in today's trade. But on that note, Arpit, what is looking good to you and where are you placing your BTST bets?
So we would be having two ideas, one from the energy space itself. So Reliance Industries, so as index is outperforming and definitely heavyweights are in action. So Reliance Industry, a classical range breakout on the weekly scale after almost 6 to 7 weeks. So risk reward is quite favorable with stop loss of 1490 for an upside move towards 1580. Second would be from the healthcare space. So if we see the healthcare sector as a whole has been outperforming, and within that Max Health has been a huge outperformer. A classical range breakout on the monthly and the weekly setup, retest of breakout on the daily scale. So looks quite strong on the daily and the weekly time frame chart. So it can go long at current levels with stop loss at 1245 for an upside move towards 1340, 1350 levels.
Take a break. Gentlemen, stay with us. When we come back, last half an hour of trade of what has been a rather eventful but a strong week of trade for Indian markets.
Hi there, welcome back to Closing Trades. Last half an hour left of trade, but let's bring you some news and updates from the meeting that the Finance Minister had with the PSU banks, because we understand that this annual review meeting has now concluded, and my colleague Prakash is joining us with more details on what was potentially discussed in that meeting. Prakash.
The Finance Minister's meeting with the public sector banks had just concluded, and various issues were discussed. We are given to understand that the Finance Minister has given clear instructions to the banks. As you are aware, that this is an annual review meeting with the public sector banks, where their financial performance was reviewed based on defined parameters. Sources are indicating that the Finance Minister has asked banks to set up lending aggressively in the backdrop of RBI's rate cut. Along with that, the government has also set higher lending target for PSBs compared to last year. A very significant development coming in. Along with that, the banks were urged to improve deposit growth area, where the government is providing its focus, and it's a major concern for banks as well. And therefore, Finance Minister has clearly suggested banks to announce some innovative products to attract depositors. Therefore, it is expected that the banks may announce a dedicated campaign for mobilizing deposit going forward. A very significant development coming in. Along with that, when it comes to NPA recovery, sources are indicating that the NPA recovery has improved in financial year 2025. In fact, PSB's net NPA stands at 0.52% as of March 2025. Along with that, credit growth to sunrise sectors was an important issue which was discussed during a course of a meeting. In fact, a presentation was made by the department as to what are the steps which have been taken to improve credit growth to sunrise sectors. Along with that, the FM has asked banks to improve lending to MSME sector, specifically issues such as digital infrastructure, steps to improve cyber security measures also came into discussion, and the banks were told to take all necessary steps to protect customers from cyber fraud cases. Along with that, one issue which was there in the meeting with regard to improving customer services. Banks were told to improve customer services through introducing new practices. These were important issues which were discussed, and we are expecting some formal announcement, some formal statement from the government. But at this point of time, we are gathering from our sources that the Finance Minister has clearly instructed banks to improve financial performance on defined parameters and improve deposit mobilization going forward. Back to you.
Jonathan, Shishal joins us, Deputy CIO with West Minister Asset Management. Jonathan, I'm actually talking to you for the first time in this new avatar.
Good morning. Hi.
Hi, how are things?
Good, thank you.
India may have lost the first test match, but I'm hoping we'll come back soon.
Yes, I'm going to be at Lord's in a couple of weeks. So
it's the weather which got heavy. It's the weather which got heavy on the last day, Jonathan.
Sorry, I missed that bit.
No, I said it's the weather which turned out to be the tricky part on the last day.
Yes. Yeah, well, we'll see. Good, great test match.
It's turning out to be a great patch for global equities. I mean, just not Indian equities. S&P 1% away from its all-time high, NASDAQ at an all-time high. The same market in the month of April, when I say same market, equities in the month of April were nervous because of tariff implementation. Has that tariff adjustment, is that adjustment over now?
I think you're quite right. If you look at where equities are globally and you look at the worries that markets have ingested, it's quite extraordinary, really, to see where we are. I think what's happened, there's certainly a case of exhaustion with regards to the constant news flow coming out of Washington, the tariffs, what's going on geopolitically in the Middle East, and investors are just, for the moment, ignoring it And obviously, as the index is pushing higher, it's sucking in more and more of the bears who are being forced to reallocate back into equities. So it is difficult, but there are clearly, a lot of concerns that still remain out there. And then obviously on top of all that, we've got seasonality. Usually, this is the latter half of June, and the next couple of months seasonally are usually pretty much the worst part of the year for markets.
Flows which have come back into India, are they a function of just the weakness in the dollar index, and do you think it will continue?
Yeah, I mean, if you look at ETF flows, obviously they've been very positive coming into India globally, and into emerging markets as a whole. I think certainly the move we're seeing from global and US investors to broaden out their global portfolios to not just be US plus a little bit of other stuff, and certainly we're seeing that happening. And there's quite a bit of money coming out and searching for homes, and EM has certainly benefited from that, and India remains a big beneficiary of that.
Okay, Jonathan, that's the take. Also want to understand your take on the dollar index that's moving down. Along with that, in tandem, you also have gold prices that are softening. Now, given that all eyes are on the US inflation, the PCE data that's going to be coming today, how do you think all of these metrics are going to come together and shape up?
Yeah, I mean, our view, the dollar has moved a long way down in a very short period of time, and probably is overdue a bit of a rebound, if we're honest. We still, though, on a medium to longer term basis, probably can see the dollar weakening off a little bit, but it has come already a long way down. And looking at sort of gold and some of the energy prices, we're still of the view that inflation, the whole inflation issue isn't dead and buried, and that we do believe that inflation will rear its ugly, but we do think the inflation issue will come back. We think growth will probably ease off, particularly in the US, and therefore the sort of stagflationary environment, which is very negative for equities, there is a possibility of that happening sometime next year.
Let's talk about your India holdings. You had a very large exposure to banks. At some point in time, you were owning Indian hotels, your exposure to Tata Motors, and a lot of IT. Has that changed?
Not really. To be honest, the market has done incredibly well. The rebound's been strong. We've kept with our position. The bank side, we've seen obviously quite a big push up in the private sector. Banks have done very well. We're still very comfortable with that area as a way to broadly gain exposure to the broader Indian story. So we're still holding those. IT remains a little bit difficult. We have seen a rebound, but obviously the extension news out, a week or so back or a few days back, shows that there's continuing to be pressures in the sector, despite on a sort of medium-term view, some good growth drivers that we still see. So we've not made any changes to our Indian positions. Still very comfortable with it. And, it's probably, if the market came off again, we might look to increase exposure a little bit. But at the moment, on a sort of emerging market basis, we're probably looking still to allocate a little bit more to China than India at current valuations.
Okay, so that's the take on what Jonathan is liking as of now and how he's positioning his strategy in the Indian markets. Jonathan, hold that thought. Let's shift focus and talk about a story that we have been talking about since the beginning of the day, and that's the Tata Capital fundraising story that we're talking about. They've received approval for 1,752 crores rights issue, and they've received a nod for their debt issuance worth 30,000 crores via the private placement segment as well. So this is something that has been in focus ever since the get-go. We understand that this nod has come in from SEBI, and they have recently also approved the draft offer document of the Tata Capital IPO. So this is also going to be something that's going to be very keenly watched in the months to come leading up to the end of this year. And what we understand from sources is that there is a $2 billion IPO that's in the works on the back of this Tata Capital being in news today. Let's take it across to my colleague Varun, who's joining by with some more details about this. Varun.
Well, so one more right issue coming from Tata Capital, and this time it's 1,752 crores. This has been approved by the board, and around 30,000 crores in private placement via debt issuance. Now, this is not the first time that the company is raising funds. If you look from FY19 to FY24, the company has raised funds to the tune of 500 to 2,500 crores, and in earlier 2025 also the company has done one more right issue of around 1,500 crores. So this is the second right issue that the company is doing in recent times. If you look, this company is actually 92.8% owned by Tata Sons, and other 7.2% is being held by other Tata Group companies, among which Tata Investment has the highest holding. Other than that, you have Tata Consumer Products, Tata Chemicals, Tata Motors and Tata Power are the other Tata Group companies who are holding stake in this Tata Group company, that is Tata Capital. Now, this is a flagship company of Tata Group, flagship financial service company of Tata Group, well diversified NBFC. It has an AUM of more than 1.76 lakh crores and lending book of more than 2.22 lakh crores. Now, of the overall book, 63% of the book is actually retail portion, and if you look in the last 3 years, the company has shown good growth from an NII of around 3,719 crores in FY23 to an NII of around 8,314 crores in FY25, and the profit has also been shown a steady growth, now stands at around 2,594 crores. This is on a standalone basis, which I am telling you. Also, if you look at the net interest margin of the company, it was in the range of 4.2 to 4.5% during FY21 to 24, and now it has risen to around 5% in the year FY25. So this is an interesting story. Tata Capital once more coming out with a right issue, and this is before the IPO that has been approved by SEBI of around $2 billion.
Jonathan, in general, which are some of the new themes or sectors in India which you like? For example, solar has become a mainstay. There was a time when defense was on back burner now, but is in the main stage. What do you like which could be new, interesting theme, idea, or perhaps a space?
Yeah, it's a bit difficult if I'm honest. The market obviously does move around. You're very busy. The market is very busy in IPOs. As you rightly say, defense, which seems to be very big over here in Europe at the moment, has, that was a strong theme in India for some time. Difficult to play some of these emerging themes through, stocks which are really focused on it. So at the moment, if we're honest, we're just sticking to the big stuff, not too specialist, not too, nothing too emerging. We try to get stuff which picks up the broader picture. So apologies, I haven't got any emerging new insights of stuff that I can share with you at the moment.
Arpit, anything interesting which to your mind is at a crossroad now where you think one should be booking profits? We always focus on kya lene ka, never talk about kya bechne ka. Arpit?
Yeah. So if you see overall, talking about the market as a whole, so if you see the entire series, Nifty was struggling, but last couple of days we have seen a very classical range breakout. So I think from a sector specific and the stock specific, I think a traction will be seen on the heavyweights. And going forward, I think heavyweights likely such as from the oil and space, Reliance, from the telecom space, Bharti, from the banking space, ICICI Bank, NBFCs, Bajaj Finance. So I think for next couple of days, if we look at the heavyweights would be in focus because the broader market is already relatively outperformed. And I think July series, as per the seasonality also, it's a positive series for the bulls. So I think heavyweights will be in action. And for next couple of days to weeks time, Reliance, Bharti, ICICI Bank, SDFC, Bajaj Finance would be on radar for next couple of weeks time.
Okay, so those are some of the stocks that are looking good. But Arpit, if you talk about the trade setup immediately on Monday, given that we've started this new series and we're very close to 25,650, what are the immediate levels that you're seeing for Monday?
Talking about Nifty, 25,500 would be the major base for Nifty, and on the upside 25,750, and then 25,850 would be the levels that we're looking out for Nifty. For Bank Nifty, see 57,000 would be a major support for Bank Nifty. On the upside 58,000, and then position 58,500 would be levels to watch out for.
Okay, and Kunal, what about you? Immediate trade setup, what do you think we could open? How do you think we could open on Monday, and what could the setup look like?
See, I think we should trade into this band now, 300 points band, 25,500 to 25,800 on the spot levels, at least on the start of the next week. on the Nifty, and I think on the Bank Nifty, but I would probably believe that there could be a chance that you might see slight bit of outperformance, especially with the private sector banking names making a comeback for themselves. So I think in that sense, 58,000 to 58,500 is where I would expect the targets for the Bank Nifty, for next week, and the support for the Bank Nifty is closer to 57,000 mark.
Jonathan, as we talk about the first half, it was dominated by news. What could influence the script of the second half? Will it be again dollar? Will it be again Donald Trump? Will it be again flows? What will influence the second half?
Yeah, I think, as I said earlier, investors are somewhat exhausted with the constant news flow from Washington, and therefore perhaps, with the tariff thing, will ease off a little bit. We've gone past sort of maximum tariff issue time. And therefore, it's back down to the economy. I think the major sort of short-term risks would be what's going on with the next appointment of the Federal Reserve governor, which obviously is going to be, I think, making the news in the next few days, which could disrupt a little bit, some of the impact of the Fed. And then, but broadly speaking, expectations certainly are for inflation to tick up in the US. In the short term, as some of the tariff costs start to feed through to the bottom line. So we're expecting inflation to pick up, growth to slow down a little bit in the US. But on the other side, you're seeing a pickup in growth in Europe. That's definitely happening. And obviously, China continues to grind higher as well. So yes, the US might be sort of easing back a little bit, but the rest of the globe is certainly looking a little bit better. So it's a very mixed, non-correlated picture I think we're moving into, and the situation for the likes of India and some of the other emerging markets looks quite positive here from a macro perspective. They're better positioned, I think the situation in the next few months could be quite positive actually for equities.
Appreciate that view, Jonathan, and thank you so much for joining us on the show, as well as Arpit and Kunal. On that note, we'll let you go. But viewers, before we start wrapping up for the day and for the week, let's just go across and revisit a very important story from the insurance space, because sources tell ET Now that insurance authority is considering investments in gold and silver ETFs by insurers, and Anurag Shah, who tracks this sector very closely, is here with the scoop. Anurag.
So, insurance regulator IRDA may consider allowing investments in gold and silver ETF because the investment committee of IRDA is likely to submit their final report, and as per our sources, the committee is in favor of allowing insurers, life insurers, to invest in gold and silver ETF for the diversification purpose also. That is the recommendation which a committee is likely to give, and during the market volatility, insurers can shift their investment to gold and silver ETF, and there will be a limit also. The limit will be in a single digit of their overall corpus in which the insurers can invest in gold and silver ETF. Presently, only in the ULIP products of gold ETF investments can be made, but not in a traditional plan. But there is a demand from life insurance industry to allow to invest in gold and silver ETF, because we have seen in last 1 year gold has given a phenomenal return, and as a strategy for the diversification also, insurance industry is demanding to allow in investment in gold and silver ETF. And as per our sources, the IRDA investment committee, which is likely to give their final submission, is also recommending to have to allow investment in gold and silver ETF with a cap, upper cap for the same. And the purpose is of a diversification, and during the market volatility, the investment option can be changed.
Anurag, thanks so much for taking us through that. Well, we're excited. We're 3 minutes away from the weekend, at least from the markets. Here's just to remind you what all we need to look forward to next week. You have manufacturing PMI numbers. On Monday, you have industrial production numbers and fiscal deficit numbers coming in from India. So watch out for all of that. But with that, let's start wrapping up for the day, and let's wind down, take a look at how today's trading session has panned out. You have Nifty 50 that's managed to somehow hold on to the shade of green. Remember, we were absolutely flat at one point of the day. Nonetheless, a 0.3% uptick is what we've seen, and we're very close to 25,650, but decently above 25,600, so looking good on that front. Sensex 2 in tandem with the Nifty, a 0.3% uptick coming in. 84,000 is what we've just crossed on the Sensex, so looking very good on that front as well. A fresh record high once again coming in for Nifty Bank today, 57,430 thereabouts is where the Nifty Bank is today, a 0.4% uptick coming here. So while these benchmarks have not done all that badly, you have the broader end of the market that has looked much more resilient, because you have the small cap space that's outperforming the entire market today and gaining all the spotlight rather. Almost a 1/10% uptick coming in. And Nifty mid-cap, you have 0.3% uptick coming in on that front. So in tandem largely with the market. In terms of, let's take you through the live event of the India Climate Summit. We will go we'll go there in just a bit from now, but let's once again shift focus back to the markets. Last couple of minutes left for the trading session, and you also have a lot of stocks from the broader end of the market and the Nifty that have done well. You have the likes of Jio Financial, Asian Paints, Apollo Hospitals, IndusInd Bank. All of them are trading with gains of anywhere between 2.5% and 4% today. So the Nifty pack has held on to the shade of green. On the flip side, a few names that have been weighing on the index today, the likes of Tata Consumer, Dr. Reddy's, Wipro, SBI Life. But let's talk about some stocks that were in focus today. AkzoNobel, of course, on the back of that JSW Paints deal. So that is a stock that has been in focus today. Other than that, you have energy, oil and gas, pharma, PSU banks, Nifty metals that have continued to be in the green for the second straight day, so looking good over there, and auto has barely made it in the green. What's not done well today is the entire FMCG space, IT, realty. All of these stocks were under pressure, and if you take a look at how we've moved for the week, Nifty Realty is the biggest loser with a 2% cut on a week-to-date basis, and metals emerge as the biggest winner with almost a 5% uptick coming in on a week-to-date basis. And you have names like Hindustan Copper, Hindalco, Tata Steel, Vedanta, Nalco. All of them have done pretty well in the week that went by. So lots to watch out for, and it's been a solid week for us. With that, we'll wrap up in terms of markets, but let's take you down to the action coming in from the India Climate Summit. And we've just seen the candle lighting happening on that front. So the lamp has been lit and the summit is underway. But with that, we'll wrap it up on this edition of Closing Trades.